if you talk about trading, then what kind of method can you use for futures trading? One thing that has to be brought out to you very clearly when we trade the futures, many times we are really trading for that difference, all right, and we tend to want to close it within the day, all right, or hopefully within a few days, right? That's really the short-term trading objective of futures. Okay, so there are many methods out there in the futures trading. For example, I know that a group of traders would just go for 2-3 tick, all right, huge contract, 2-3 tick, and they're out of the position, and then they will do this like 5 times a day, and that's it. All right, sometimes if you're lucky, then their day will ends at 10 o'clock. Okay, starts at 8:20, for example, 8:30, and then 10 o'clock. That's it. Okay. I prefer more towards the swing trading, meaning that, for example, I prefer to open a position at the key level, hopefully, all right, and then hopefully to profit for quite a fair bit of difference, okay, from the price that I open, okay. And in terms of my trading style, I really look for moments or days or periods where it can move a lot, meaning that I look for space. Okay, so a different trading objective. So one is that you can use that for hedging, as I mentioned just now. You have existing equities portfolio, you use that for hedging, or purely for speculation. And I believe that a lot of people belongs to this group, speculation, partly because of the margin requirement. You really use minimum margin, all right, or rather a small amount to trade into a huge contract. So some people don't want to buy into banks, for example, because that's expensive, right? So instead of not buying into the bank stocks, they decided, hey, look, they want to transact into the futures contract. But one thing is that if you are doing the futures contract, you won't receive dividends, okay, because you don't hold any of the stocks, all right. And some people like to take position, so there will be different trading profiles. As I mentioned, scalping, you really go for a few ticks, or maybe and you're gonna enter in a very low time frame. Your chart will be probably in a tick chart, or you might be into the 1 minute chart or 5 minute chart. All right, some might be doing the intraday trading, meaning that they will start the day, and if there's some nice profit along the day, and if during the day it move a lot, that's really a good day. All right, so they want to close that position during at the end of the day, hopefully take a position in the morning and close it when the market close. Okay, so swing trading, now by definition of swing trading, is not so much of the period, but more like you really want a fair movement of profit. Okay, so that's the swing trading. And of course, that some people like to take positions, okay, meaning that, for example, instead of trading buying into the equities, they want to use the futures to take some positions. Okay, now the first 3 type of trading profiles, you need to go to the lower time frame to do the trading. Okay, lower time frame means that not the day chart, but anything that's in the hourly, 60-minute, 5 minutes, or 15 minutes, right, type of chart. So I have here, which is the SimSki Futures, a continuous chart. Okay, because as I mentioned, every month is going to have expiry, right? So it's very valuable, all right, to have continuous price chart, because you do get the previous historical prices. You do have a perspective of what are the important levels that people are looking at. So this is a day chart, continuous. Okay, now this is a place that you can get streaming charts. Okay, again, that this is just a free resource. I'm not like endorsing this, right, but just happen to have this as a free resource that you can go and get the streaming chart, all right, the intraday 30 minutes, 5 minutes. Later I will show you the price chart later on. Okay, so this is a typical 30-minute price chart on the SimSki Futures. Okay, should you want to have a copy of today's material, you can request from SGX Secretariat, and then you'll be able to get the link here. Okay, the link here to the free charting platform. As I mentioned, the broker, which is the clearing house, they will also provide charts as well. Okay. Okay, now what's the trading method? We can have the price action. So this will gives you like a general guide. It doesn't target specifically how to do it, all right? But it gives you a general guide on what are the areas that you can explore and study deeper, all right, into each of the area. Okay, so for example, I know that a group of pros, all right, they are trading the SimSki and they're doing so well. They're using simply the support resistance and the breakout of the day trading range. Okay, so I talk about later on the day trading range. You can use patterns like candlestick chart patterns, or just the opening price or the closing price. There can be moving averages, trend line, channels, or even geometric type of studies like Fibonacci, harmonic, and harmonic that you can calculate all the ratios, etc. All right, now this is a very simple method. What I did was to draw in a trend line here. So that's a trend line, a very easy trend line on a 15 minutes, right? And price hit this trend line. As I mentioned before, right? There's a group of traders. What they do is that they just observe the first 15 or the first 30 minutes of trading. Okay, so this will be the first 15 minutes of trading. We call that the opening range. Okay, so what they do is that they will identify a direction. Okay, of course that they are very experienced. They can identify a direction from the overnight market or from the sentiments on the ground. All right, then for example, I would draw a trend line here. So this is the opening range for the first 15. So they just observe the opening range for the first 15 minutes or the first 30 minutes. And once price move out of the opening range, they enter the trade and then they take profit, and that's it. As simple as that. Okay, so some people who trade futures, they don't use very sophisticated method. As long as it can move and they get that few ticks, all right, on a huge contract, they make the money already. Okay, so this, I've demonstrated this live in one of the session and it works so well. Okay, so as you can see, price move and then we move into the overnight market, the T+1 market. So that's when the cash market is closed, but the futures market is active. And if you're off work and decided to trade, for example, then you can see that they move basically in a very nice range here: buy low, sell high. Okay, so that's the low at about 286 plus minus, and then the high at 290. Okay, so the SimSki, it does move with the Dow Jones. Okay, so when Dow Jones has a reaction, it has a reaction as well most of the time. Okay, so some people can use a moving average. I don't really prefer this, all right, because in the futures market you really want to move quick, fast, all right. So but if you like to use the moving average, then you can wait for the moving average cross and to trade on the retracement. Okay, cross up and then wait for it to retrace back down, cross down, wait for it to retrace back up. Okay, so this is one of the very typical retracement method. All right, now what I prefer, all right, is to really use price base. For example, again, on a 30-minute chart, I've drawn in a trend line here. So that's a very nice trend line. So I've drawn in also the Fibonacci retracement from the high to the low. When price retrace near to the golden ratio, that's about 62%, near to the trend line, all right, I'll be waiting for a reaction here, usually to break the opening range. Okay, so to identify, for example, the location that you want to trade and wait for a reaction. So for example, all right, some of you might have experienced that usually the futures market move slightly ahead of the cash market. Okay, so sometimes that by looking at the futures, we roughly will know that, for example, the banks is going to drop already. Okay, so that's the added benefit if you can watch the futures market as well. Okay, now there are also other methods such as the use of the divergence trading method. So divergence, for example, you can use the MACD RSI, and you can also look at the divergence between the market and instruments. All right, so what's the divergence? For example, you have a 60-minute chart of the SimSki, and this is very much established as a downtrend here. So downtrend here, price retrace higher, move up higher. However, right, at the second try, okay, at the second try, towards a higher price, we saw a divergence, okay, a bearish divergence with the indicator, all right, indicators such as the MACD here, the MACD histogram. So the price move higher, all right, the histogram actually move lower. So you can use that as divergence as a form of trading method, or you can put in some support resistance here and use the divergence as a timing tool to lead you into this particular trade. Okay, I have a course coming up on the use of divergence. All right, so you can attend that with the SGX Academy. All right, now there are also others who use the volatility. Basically, as I mentioned, right, sometimes the market reacts based on overnight news. Okay, overnight news, they react, right, and then when it comes back into the actual cash index, they go back into that reality already, and then you move in the normalized manner. So when you have the volatility type of trading, it becomes very, very useful, all right, to trade. For example, STI had a gap. Okay, there's a gap up here, hit into the top of the Bollinger Band, right, with the overbought RSI, meaning that RSI is showing the overbought, all right, and hit onto the top of the Bollinger Band, all right. So what happened is that, you know, we just have to watch the opening price range. So this is the opening price bar here. So that's the low of the range and the high of the range. Okay, so when price is to break below, for example, the opening range, and then we will take a short. Okay, we will take short the Simski. Now, why is it that we take a preference, all right, to short? That's because price was near to the resistance level, so that's the previous resistance level, and at the same time it hit right to the top of the band. So we are waiting for a failure, for price to fail on an overbought RSI. Okay, so you can apply all these technical tradings into the use of futures, right? It's not any different from looking into the equities. Okay, it's just another product. All right, we just have to note about some of the terminologies of the futures market, and that's all. All right, okay, now let me just sum up. All right, sum up in terms of the method for the futures trading. Number one, okay, very important, I highly recommended that if you are doing the futures, then you need to explore into the intraday analysis, all right, and to use the lower time frame trading. You realize that all the charts that I've shown, they are either 60 minutes or the 15 minutes chart. So it is important to understand the relationship between the multiple time frame trading. So for example, what's the day time frame, or what is it like, and then how do you cascade that lower into the lower time frame, basically to trade into the lower time frame. Okay, lower time frame such as a 60-minute chart or such as a 5-minute chart. All right, and the need to have active trade management. Please don't open a futures contract and you forget about it. I do have students, all right, who totally forget about the futures contract they open as a hedge, all right, and until when it's near to expiry, or rather expired already, then you realize, oops, I have a contract open. Okay, and of course that you need to have proper trade management, money management. For example, you need to determine your stop loss. When you open a futures contract, where's the stop loss and your target profit, and also very important, as well as your trade size evaluation, because that has to do with your margin as well. Okay, you need to make sure that you have enough margin to cater for market volatility. Okay, to know more about the SGX specific investment product, which is the SIP, you can scan this code here. Otherwise, thanks a lot for joining. See you guys next time. Bye bye.